So good morning, everyone. My name is Fisogo Mboto, and today I'll be taking you through some of the highlights from our Diageo company update report. So on the summary side of things, so we view Diageo at attractive price levels with a strong quality portfolio of spirits. We'll sort of go through some of the brands and compare them to some of the peer group to really get an idea of why we really see it as a high margin portfolio focused business and where that kind of filters into the value proposition of Diageo. So I have an intrinsic value of about 20 Great British pounds with an upside of about 10% when the report released. You would have seen that the markets have been quite volatile over the last 2 weeks. So that upside now was closer to about 16% from when we released the report. But the recommendation is based on, number one, high margin portfolio focused on spirits. So what we'll see is that spirits is about 80% of revenue, and we'll highlight it with the pie chart and compare it to some peers. And that's where Diageo's value proposition really starts to shine, because they've got those high margin spirits focused portfolio that really has been the primary driver of growth overall and has been supported by premiumization of its core products, being a protector of organic growth. Number two is just attractive valuation levels relative to history. And we'll look at a chart on PEs and next 12 months PEs for Diageo, Constellation Brands, as well as Amhouse, to sort of see that when you look at the valuation multiples cyclically, they are at relatively low multiples when compared to history, but Diageo is also expecting operating profit to grow while they control their costs with their accelerator program. So this does support against a value trap where you start to see the business is a really good quality business, but they never really close that gap between where the valuation levels are and where you would expect them to be given their growth projections. The other thing that you would have seen would have been a management change. So they came up with sort of a statement of having picked out a new CEO that's going to start on the 1st of Jan 2026. That would be Sir Dave Lewis. He's currently at a consumer health company, so he's going to pivot from that to alcohol. The market liked that news quite a bit. You would have seen that it reversed all of the negative price movements from the previous week related to the results, which is great for us. Now we think that the business is sort of needing a change in leadership, a change in strategy to really try and close that gap between not being a value trap and executing on the quality products that it has. Now, given the fact that he's going to be starting on the 1st of Jan, it kind of means we're not really going to hear from him in terms of strategy changes and any changes in guidance up until the next release. So even though we're starting in Jan, we're probably going to hear anything. We're going to hear something from him that could bode positive for the market over the next 3 months after that. So around maybe March, April. Right. Now, third point on our recommendation base is premiumization of core products. So you would have seen that in the spirit/alcohol world, it's not necessarily about just drinking any kind of alcohol, not any kind of spirit, not any kind of beer. It's about drinking the best. And that's where the premiumization for Diageo starts to highlight, and we'll show it with some of the brands where their staple name, where you don't even have to be a drinker to understand those kind of products. And that's how that organic growth is being protected by Diageo with those really strong brands and then the premiumization of them as well. Last but not least, margin levels. Cost and volume pressure seems to be at a cyclically low point. And we'll sort of see that with all of the peers as well. And what this does is it does position the company quite nicely for some upside potential in a recovery period. And it also highlights where in the sort of economic cycle and how that impacts the consumer in terms of buying down, or at least trading down. It positions Diageo at a great place for when we start to see an alleviating pressure in terms of inflation, and then alleviating pressure on consumers' pockets through a decrease in a decrease in interest rates as well, and how that's going to filter into the performance of Diageo.